Good morning, students. Last session we discussed about the different type of inflation, and also last class we finished after based on speed. We have four different type of inflation. One is creeping inflation, second one is walking inflation, and the third one is running inflation, and the fourth one is hyperinflation. And today, and also last class we discussed demand pull and cost push inflation. And today we are going to discussing the remaining type of inflation and the causes for inflation and the effects of inflation and the business cycle. Okay, students. Next we will move to the other type of inflation, that is on the basis of speed. Now we are going to discuss here about the other types of inflation on the basis of speed. The first type is known as the currency inflation. So the excess supply of money from the monetary authority in India, Reserve Bank of India, the excess supply of money, the circulation cases rise in price because the peoples, they are ready to buy goods and services even unimaginable price because the circulation of money is more. And the second one is credit inflation. When banks are liberal to lending the credit, the banks they are reduce their rules and regulation for the lending the money to the peoples, and the money supply is also increasing with the help of this free lending facility. It is also another one type of inflation with the help of the rising prices. And the third one is known as deficit induced inflation. The deficit budget is generally financed through the printing currency. For example, what do you mean by deficit budget? Income is less than expenditure. Income is less than expenditure. That is known as deficit. For example, the government income is 1,000 crores, but the expenditure is 1,500 crores. This 500 is known as deficit financing. Based on this deficit financing, the government issued or printing the new currency by the central bank. As a result, the circulation of money is more. With the help of this excess supply of money, it will lead the rise in the price. It will lead to the inflation. And the fourth one is profit-induced inflation. When the firms aim at the higher price or higher profit, they will fix the price with a higher margin beyond the level of MRP rate. So the price goes up. It will lead to the another type of inflation, that is profit-induced inflation. And the fifth one is scarcity-induced inflation. The scarcity of goods happens either due to fall in the production. For example, farm goods. Why the agricultural products, especially in the rice price increase last 5 years because of the failure of availability of rice, and due to hoarding or black marketing. For example, last maybe 10 years before, the Indian government is fully collapsed because of the hoarding of onion, and this also pushes up the price. One is the fall in the production, and the second one is hoarding the production or black marketing. It is also boosted up to the higher price. This has happened in Venezuela in 2008 in recent years. And the sixth one is the tax-induced inflation. Increase in the indirect tax like a sales tax, corporate tax, like this. Excise duty, custom duty, and sales tax may lead to rise in the price. For example, petrol and diesel. Now the whole India will affected by the increase of the petrol price. And behind what or how the petrol price is fixed in India, you will add the raw petrol and purifying cost and the excise duty, custom duty, and the sales tax and the GST, both central government, state government, union pradesh, and the profit of the government. So you will include all the things. It will happen the increase in the petrol price. It is also called the tax inflation. And next we will move to the causes of inflation. The causes of inflation, the first causes is known as increase in the money supply. The inflation is caused by the increasing in the money supply from the government of India, Reserve Bank of India or monetary authority, which leads to increase in the aggregate demand because the people they have more money, so they are ready to buy any product with higher prices. The higher growth rate of nominal money supply, the higher rate will increase to the inflation. And the second one is increase in disposable income. When the disposable income of the people, disposable income means after the payment of direct tax, what are the income we will take to our home, that is known as disposable income. When the disposable income of the people increases, it will raise their demand for goods and services. For example, one man, they are in last month they got 10,000 salary, and present month they got 20,000. After the payment of direct tax, he or she will take 10,000 to their home last month, and present month the increment, the company provided the increment, additional facility, additional incentive, the salary will increase from 10,000 to 20,000. After the payment of direct tax, he or she will take 20,000 from their home. It will create the new demand for goods and services. And disposable income may increase in the rise in the national income or reduction in the tax and reduce in the saving of the people. So it will also lead the inflation. And the third one is increase in the public expenditure. The government activities have been expanding due to the development of activities. For example, the development of school, colleges, hospital, roads, communications facility, like this. Expanding the due to the development activities and the social welfare program, this also causes for price rise because the people they will get employment opportunity. With the help of employment opportunity, the people they will get more income. The more income will leads to the purchase of goods and services. And the fourth one is increase in the consumer spending. The demand for goods and services increases when they are given the credit to buy the goods on higher purchase or installment or EMI. Every citizens they will ready to, or the company they are provided the goods and services to EMI option or higher purchase and installment basis. It will also one of the causes for increase in the price, or it will lead to increase in the inflation. And the next one is cheap money policy. The cheap money policy or the policy of credit expense increase in the money supply. The government or banking sector, they will reduce the rules and regulations for the lending money. So the people they are borrowing money from the bank easily, and they will increase their demand for goods and services. Next we will move to the deficit financing. In order to meet the mounting expenses or increasing the expenses, the government resorts to deficit financing and borrowing from the public and ever printing the more notes. Even printing the more notes, the rise aggregated demand because the government to meet the government to come out from the deficit financing. One type is how the government will use two types of remedy to meet out the deficit finance. One is borrowing from money from other countries. Another one is to printing more currency in the circulation. This ratio, the rises of aggregate demand in relation to aggregate supply, thereby leading to inflationary rising the prices. And next we will move to the black assets and activities and money. Under the existence of black money and black assets, black asset means unaccountable assets, or politician they will purchase the property to other name due to corruption, tax evasion, etc., increasing the aggregate demand. People spend much money and lavishly mean very easily, and black marketing and hoarding means we kept money unaccountably in the home or reduce the supply of goods. This leads to rise in the price level further. And repayment of public debt, whenever the government repay its past internal debt the public, it will leads to increasing the money supply with the public. This led to rise in the aggregate demand. When the people, they will repay the amount to the public, and the government sometimes they will increase their repayment capacity to the domestic borrowers. It will also leads increase in the price. It will leads to the inflation and an increase in the exports. When the exports are encouraged, or when the government increase the exports, the domestic supply of goods decline, because most of the goods they are exported to foreign countries. In domestic area, the goods and services are not available, so the prices are rise. Next we will move to the effects of inflation. Effects of inflation classified into two different gettings. One is effect on production and effects on distribution. First we will going to discuss about the effects of production. When the inflation is very moderate, it acts as an incentive to traders, because they will get more profit, and also the producer also they will get more profit. The profit due to rising the prices, it will encourage and induces the business class to increase their investment in the production, because with the higher price the producer they will get more profit. With the help of this more profit, they will invest more money in the business. And hyperinflation result in a serious depreciation of the value of money, because inflation is so high, the people they are not ready to purchase any commodity. They will keep money in their bank account or in their home, and the value of money and discourage saving on the part of public. And the second one is, when the value of money undergoes or reduce considerable depreciation, this may even drain out the foreign capital already invested in the country. So the foreign company they will not invest in the money to the country. They will drain their wealth to their home country. And with it reduce the capital accumulation, the investor will suffer serious setback with a adverse effect on the value of production, because the price continuously rises. The people they are not ready to purchase any commodity in the market. And inflation also leads to hoarding of essential goods. That means பதுக்கி வைக்கிறது அத்தியாவசிய பொருள்களை. And inflation also leads to hoarding of essential goods both by the traders as well as the consumer also, thus leading to higher inflation rate. And inflation encourages investment in the speculative activities. By speculative activities means the people they are hold their money in their hand without purchasing of goods and services. And next we will move to the effects on distribution side. Students, next class we will going to discussing the effects on distribution and the measures to control distribution, and the meaning of deflation, disinflation and stagflation, and also we will discuss the trade cycle. So far we are going to complete the 5th lesson and successfully, and next class after the next class we will going to start the new lesson, 6th lesson, that is known as banking sector. Very interesting concept. Once again I thank you for those who are coming yesterday online live doubt clarification class. Monday we will meet once again, and I will wait for your doubt, and I will ready to clarify your doubt without hesitation. Please students ask more doubt, and more I will accept more students to participate online live class. Thank you students.